Good morning to the live market open of June 1st. It's a Wednesday, it's a new month, and we have lots to talk about. I'm Yochai Lam of Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. Good morning, everybody. Good morning, Fabian. Good morning to whoever is coming to the show. As always, we'll talk about recent developments in markets, or quite a few, and cover a few charts and levels, discuss the next 24 hours, and answer your questions. In today's special segment, we'll focus on 5 points related to dollar-yen. Okay, but let's begin with the news, with the mood. The new month begins, and that means that we had some last-minute movements yesterday. Good morning, Luca. Good morning, Adinda. And we have Brexit polls tightening. First, we had the ORB poll by the Telegraph, that jumped sort of back and forth, and then we had the ICM poll, which also, both of them showed significant momentum towards the Brexit campaign, okay? And that had its impact on the pound. Oil is not going anywhere fast. It's not a factor this time. Shouldn't be here in the mood, but I mentioned it because we still have actually OPEC meetings going on. Well, I'm not expecting anything out of that. And Japan officially delays the sales tax by 2.5 years. And we certainly have a buy the rumor, sell the fact. Okay, yesterday's figures were basically as expected. Well, German unemployment did rise, but the unemployment rate fell, so it was a bit mixed. CPI inflation figures do not change the picture for the ECB. They came out as expected in the Eurozone. Canadian GDP, that missed quite badly with, that missed significantly with the drop of 0.2. It hurt the Canadian dollar. The Fed's favorite inflation figure, core PC price index at 1.6. That's exactly like last time, exactly as expected. No changes, no rocking the boat. We'll talk about the chances for rate hike. Consumer confidence in the United States, the CB1 missed just a bit. The bigger news came out at night. Australian GDP beat a lot. It was 1.1. If you compare it to the annualized US figure, it's something like 4.5%. That gave the Aussie a boost and carried away the kiwi. And Chinese PMIs, the Caixin one, the independent one, missed by just 0.1%, so it didn't move too much. So lots of things to talk about. Let's just cover the charts. Euro dollar. Unfortunately, this is the world's most popular pair, but unfortunately, it doesn't have the biggest movements around the same levels. It did go up yesterday and then fell down again. Basically, the range for this morning is just 25 pips or even less at the 111 handle. There's high tension towards the ECB decision tomorrow. The latest figures from the Eurozone did not change the picture, okay? Yeah. So nothing much to talk about. I would say strong support at 110.70, resistance, 111.80. Bigger movements are here. Look what a turnaround for the pound, the big short, if you wish. This morning we are seeing some stability here, but yesterday it's quite a big fall. The first opinion poll coming out was actually on Monday night, but it was digested only in the morning. It sent the pound down, and then it managed to recover, managed to tackle resistance at 146.50. But then when that Guardian poll came out, it showed a worsening situation. Guardian publishes two polls. It's an ISM poll for the Guardian. The phone poll usually showed a big margin for the Remain campaign, and the online poll, a small lead for the Leave campaign. Now both polls were fully aligned, showing a lead for Leave, okay? And the ORB poll for the Telegraph, it already showed a 13% margin in favor of the Remain campaign. Now it's only 5%. So accumulated, these two polls sent the pair down. We're under the 145 handle. I still see, 144.80. It's weak support, maybe 145 is resistance, followed by 145.80, 146.50, and on the downside we have 144.40 and 143.70. Good morning, Ed. Good morning, everybody. So quite a big movement down in the pound. We do have one event today in the UK, but 23 days to 22 days to the referendum. This is the biggest market mover, undoubtedly. We have seen a big move down also in dollar yen this morning. What happened in Japan? Well, a few days ago on Monday morning, we had a confirmation. We had talk that Japan is going to postpone the sales tax hike. It was talked for a very, very long time, and it sent dollar yen higher. Stocks went up. Of course, less taxes mean a stronger economy. And in Japan's case, good news is bad news for the yen, okay, because it's a safe haven currency. And with the correlation with the Nikkei, we had the pair going up, 111.47, okay, 111.50. This morning, we had a confirmation by Prime Minister Shinzo Abe that they're going to postpone the sales tax hike to 2019 by 2.5 years, okay, and we had sort of a buy the rumor, sell the fact. The low so far is 109.64 and 109.40 support, 110 resistance. Quite a big turnaround. Reminds us of other turnarounds, for example, with the Bank of Japan, when they announced, when there was talk about more stimulus, and then eventually they didn't do anything. So the yen went up, dollar yen went up and then down. But this time, we didn't have a surprise. We just had a confirmation. So it's basically a sell the fact moment. Dollar CAD feeling the heat of yesterday's weak GDP. Well, this morning it's stable, but the direction is still higher. Oil prices, well, are also sort of grinding a bit lower at the 48 handle, but it was the GDP disappointment. No huge moves here. It's becoming a bit more boring than it used to be. Dollar CAD currently hugging the 138 level, which used to separate ranges. It isn't that strong anymore. 130 in any case remains support, and 131.70 resistance. Aussie dollar, here we had quite a significant move. Bang on resistance at 73, the round number we talked about several times. Worked to support in early May, then as resistance, and now worked perfectly well as resistance as well. So already 36 hours ago, we had higher expectations for the Australian GDP, but it was even better than expected. 1.1 quarter over quarter, 3.1 year over year, the highest growth rate, the highest year over year growth rate since the third quarter of 2012. Okay, so it's the best in 3.5 years. And yeah, the next line of resistance, 73.75, support at 72.50, followed by 71.75 and 71.40. So quite a big move there in the Australian dollar. As we speak, we're seeing it retreat from the highs, correcting. But technical behavior, we talked earlier in the week about euro dollar, how I said it's prone to false breaks, and how I like the Australian dollar. This isn't always the case, okay? But in this, in today's case, Australian dollar did prove itself quite nicely. Kiwi dollar once again got a bit carried away with the Australian dollar. 67.80 is the current level. It managed to break above 68 for a short period of time. 68.40 is some kind of resistance. So we're already in the higher end. We went already to the higher end of the range. Now we're sliding a bit to the downside, but all in all, we did have a big bounce there from the 66.70 line. So the Kiwi is getting carried away. Today the Kiwi has another test. Dollar Swiss 99.36, holding above the 99 level, 98.50, 98. Further levels of support, not moving anywhere fast. No change this morning. Keeping a safe distance from the parity level. Euro Swiss, more of the same, hugging 110.50, 110.60. Keeping a safe distance from 110, but also from 111. Looks that things are stable for the Swiss National Bank. Euro pound, here, of course, we had big movements. So maybe we should update these lines. We had some kind of support here at 75.60. The pair traded on lower ground, this cross, very interesting cross. So when opinion polls improved in favor of the Remain campaign, in favor of the Better Together, or whatever they want to call it there, we fell under 76.50. With the fresh deterioration of the pound, with these fresh opinion polls, a break once again above 76.50, just touching 77 this morning. I see resistance at 77.40. Okay, and euro yen, big fall this morning, of course, all driven not by the euro but by the yen. 122.30 is the current level. We dipped under 122. Still see support there at 121.65, sort of a triple bottom on this important cross euro yen, two of the world's most traded currencies. Okay, and 123 is some kind of resistance. Very choppy action this morning. Pound yen, okay, here we can't put the blame for the cause for the movement just on one currency, but actually it's both currencies that are moving, and quite a strong move from the highs. We just tackled 163.80 not that long ago. It was actually this week. The failure to break above 163.80 sent the pair all the way down, holding on to support at first at 160, and now trading at 159.10. Support is seen at 158. So the dragon, the Gepi, is living up to its reputation of something like, well, I would say nearly 500 pips in a matter of a few days. The fall this morning is driven by the yen, yesterday by the pound. Yesterday it was pound weakness. Today it's yen strength. Anyway, for this morning it's 0.8% to the downside. Okay, and continue around with oil prices sliding a bit lower. I don't see it as related to OPEC because we haven't heard anything significant from OPEC, only that they're in Vienna and talking, and there's high security there, and that they'll continue talking. No production cuts are on the cards. No production freezes are on the cards. 48.58 is the current level. Yeah, I would say 48.30 is some kind of support. 50 is, of course, the magic number to the upside. We're talking about, of course, WTI crude oil. Okay, so that's the roundup for today. Certainly a few movers: the pound, the yen, the Aussie, and the kiwi. CAD and euro remain the frustrating currencies. All right. Any questions? Sort of a quicker brief today because, well, so many things to talk about. I want to show you a few more things before I move to today's events. First of all, I think I've shown you this in the past. We have the Brexit tracker from the Financial Times. There are lots of other trackers. Anyway, yesterday it showed 46 to 41. Now it's 46 to 43. And these are the latest polls I think you should be watching. Well, the ICM, both ICM polls now show a lead for the Leave campaign. Okay, 47 according to, I think it's the online poll, 47-44, and 45 to 42 on the phone poll. The phone poll used to be different. Okay, the difference is the level of undecided. When excluding the undecided, it's 52 to 48. Okay, still within the margin of error, but a big change in comparison to previous polls. And yeah, question here: do you think the ECB may come up with a special plan in case of Brexit? Of course, I think they already have a contingency plan in the cards. Of course, the contingency, no, they won't. I don't think they'll announce it. I think they'll just say that they're taking the necessary steps or something like that. Look, I'm sure all central banks and governments have contingency plans. The idea, in case of turmoil in financial markets, which is financial markets act first and foremost before anything else, is to stabilize things. The Bank of England, we know that, had a plan in case of a Greek exit of the Eurozone, for example. I'm sure the Federal Reserve has plans. I'm sure they will be asked tomorrow about this, and they'll say that they have plans, that they're ready and things like that, but nothing to detail. Basically, it's supplying liquidity to the banks instead of in case of shortage or things like that. Even if they say that they don't have anything ready, well, I don't. Even if they say they have all the plans ready, I don't think it doesn't matter what they say. It won't impact markets. There are other things with ACB that will move markets. Okay. Let's continue. So we talked about all currency pairs. Let's talk about, before we move to today's event, just one more thing. The chances for rate hike in the United States, also one of my favorites. So for June, chances are now lower from 73%, or let's look at the other way around. Yeah, from 32% to 22% or so. Lower chances. Lower chances for a rate hike in the United States, because we didn't get the smoking gun history. We didn't get more evidence that inflation is rising. That was yesterday. Same thing with Yellen on Friday. I mean, she did warm up towards rate hikes, but talked about the coming months, not the next month, not June. Same thing with other figures. So things are looking positive, but not enough for June rate hike. In any case, I don't think June is on the cards, and just Brexit. June right now it's moving in tandem with Brexit polls. Yeah, maybe that's related. It makes sense because Brexit is one of the reasons also cited by Fed officials as a risk to the global economy. And yeah, so, but if we look at July, we're seeing significant chances for a rate hike there. It was already a bit higher. It was just above 60%, now just under 60%. But nevertheless, according to bond markets, there's a good chance for a July rate hike. I think that in case of a no Brexit and okay figures in the US, we'll have it. Comment here from FX Ambassador. Rate hike will be September 2016. Well, September makes sense because, first of all, bond markets show even higher chance, and they have a press conference scheduled and also fresh forecasts. Why do I think it'll come already in July? Because they'll have enough data. They'll already have the initial Q2 GDP figures. And more importantly, it's far enough from the elections in the US from November. So I think it'll come in July, and then we'll have a long pause until after the elections. But also September is an option. Some banks are saying that as well. Morning, Sirik. Morning, everybody. So, okay, we talked about all the peripheral stuff. Brexit polls tighten. Oil not going anywhere fast. Japan officially delays the sales tax, and it triggers the sale buy the rumor, sell the fact. And the big event is on overnight was the Australian GDP that sent the Aussie higher and carried away the kiwi. Today, as we speak, we have Eurozone PMIs being released, purchasing managers indices for the manufacturing sector. So we already had the numbers from China. Very, very small disappointment. Now we have the Eurozone final figures for France, Germany, and the Eurozone, and the initial figures for Spain and Italy. Let's take a look at that. Okay. So the figure for Spain, quite disappointing. Blame it on the political uncertainty or whatever you wish, but anyway. Sorry. Okay. So Spanish manufacturing PMI drops from 53.5 to 51.8, worse than the drop to 52.6 that was expected. Not really good news. Later we have markets figure for Italy, and then the final figures for France, Germany, and the Eurozone. The German one is the most important one in general, but because it's not the preliminary figure, it doesn't have the same impact. Comment here from Luca: the odds at big betting houses have barely changed, though, which makes me think these polls are nothing but noise. I'm a pound buyer at Euro pound 77.50. Okay, yeah, sometimes they say that opinion polls, it's what people say, but betting is what people where they put their money at. So it makes a difference. It has a bigger impact. So might be a lot of sense. I think in any case it's going to be a binary event in terms the risks are not fully balanced, but in case we have a Brexit, it's going to be a total collapse of the pound, but in case we have a Remain, the pound is going to rise, okay? And with you, news are tailored to what they want to do with price. Yeah, I mean, these things go together, and there are lots of spins also in the media. Anyway, talking about figures, let's see if we have any impact from that Spanish figure. No, the answer is no. Yeah, tail wagging the dog, we've seen that so many times in history. Could be the case now as well. All right, events for today. We talked about the Eurozone PMIs. Let's talk about UK PMI. That's a more important figure. It's the first and final, no preliminary like in Germany and France. So we're expecting here, where did that number run away? Markets manufacturing PMI. Last time it was already negative, similar to China's negative figure. That means under 50 points in contraction. A drop to 49.2 was worrying last time. This time we're expecting a small bounce back up. 49.6 is the level we're expecting, which is still under 50. Currently, opinion polls are first foremost betting chances, everything about the Brexit, but we'll have some comic relief, if you wish, or not comic, but small focus around the event on this figure. At the same time, we also have net lending to individuals expected to drop from 9.3 billion to nearly half of that. Also important, but manufacturing PMI is more important. Consumer credit at the same time, and mortgage approvals, which are expected to drop. So quite a few figures this morning from the United Kingdom. The most important one is manufacturing PMI, but above all these important figures, we have the most important, the next Brexit poll. Okay. Comment here from Luca, buying cable at 143.50. Okay. Let's share the chart also with everybody here. Yeah, so that's your cable chart. We have this uptrend, so you're looking for the price to fall to the uptrend and then to buy the bounce back up. Okay, so thanks, Luca, for that. And you say also dollar yen can't keep its skirt up for a decent run. Was going to buy around 110, but really don't like the way it can hold on to its gains. Gonna pass on that. Yeah, dollar yen has been quite problematic recently. You know when the next polls are scheduled to come out? No, I don't know that, but you can follow live blogs both in The Guardian and The Telegraph. Especially, I like The Guardian personally, but and they have this sort of all the updates on the referendum. Maybe they have there the scheduled, the next timing of the scheduled poll, but in many cases it's a surprise. Some cases, like YouGov, they like to tease. Okay, they like to tell us we're going to release poll in the next hour or so. Okay. Other event for today. The biggest event for today is the first hint for the non-farm payrolls, the US manufacturing PMI coming from ISM. So first we have a warm-up from the market figure, which is less important in the US, and it's also a final figure, not the initial one. So the initial one stood on 50.5. Let's see if it's confirmed or not. Usually there are small revisions, but more importantly, we have the ISM manufacturing PMI. A small drop from 50.8 to 50.4 is expected. For many long months, this manufacturing PMI was in contraction zone. Didn't go too deep, didn't go too far. It was around, just under 50. It bounced back earlier above 50, but it's not going anywhere fast. The manufacturing sector in the US is very slow, at a pause, not going anywhere fast. Let's see, this is expected to continue. The employment component is also important for the non-farm payrolls on Friday. We also have construction spending always accompanying this figure, and a small rise of 0.6 is expected. For those of you trading the kiwi, the bi-weekly milk auction always rocks the kiwi, always makes a difference. And last time we had a bounce back after a drop. We had a drop 4 weeks ago, then a bounce 2.6%. We had lots of weeks of this seesaw, one time going up, one time going down. If we have a second consecutive rise, together with that backwind from the Australian GDP, perhaps we'll have more room to the upside. Okay, so yeah, let's see what's going on over there. A key figure for the kiwi. Okay, at 6 GMT, 8 here in the old continent, the Fed's beige book used to have more impact. It's sort of what the Fed officials see 2 weeks before they meet. But usually the wording is very general. Some regions grew at a modest pace, some at moderate one. It could be important, but not necessarily so. We also have the API, crude oil stock, supposed to be a hint to the crude oil inventories. Not always that way. Last time we had a big drawdown, big drop of 5 million barrels, over 5 million. Let's see what happens with this now. Yeah, but I would say the main events, of course, the UK PMI, the US PMI, the milk auction, and then at night we have retail sales and trade balance from the land down under. After that blockbuster GDP, I don't think they'll have such a big impact, even though it's more up-to-date data. The figures are for April, not for Q1. Anyway, small rise in retail sales is expected, and another deficit in the trade balance is also on the cards. Okay, so quite a few events for the first day of the month, and tension ahead of the ECB tomorrow. Tomorrow we'll do a sort of a bigger preview of the ECB decision. FX Ambassador says the Brexit is just a waste. Well, I tend to agree, because if Cameron is going against, why wants to stay in, and we all know that the agreement he reached with the EU is not really significant, that most of the cases around the economy, for if the UK is better in the EU or out, why did he go for that? The reason, of course, is political. The reason is that he wanted to keep those objecting the EU in his party, or voting for his party, not voting for UKIP. But from an internal Tory, issue, it turned into, well, according to G7 members, the IMF, everybody, it's now a global issue. Okay, I want to repeat what I said in the past about this. Even if we have a small margin in favor of Remain, which looks like it's going to happen according to the polls, according to analysts, the discontent is going to continue, not only in the UK, but also here in Spain, also in Italy, also in Germany, in France, everywhere. About the EU, the discontent, and I think we're going to have, it's going to be an ongoing story, okay? It's not a once-in-a-generation referendum unless we have 60% for Remain or higher, in my opinion, of course. Okay, so I think we talked about everything there is to talk today. Luca's comment would be set to take the fish and chips from our restaurant menus, the greatest contribution of British cuisine to the world gastronomy. I would say that the best contribution is the Indian curry and general Indian food that is now more associated with the British cuisine. Well, I'm sure many people would disagree, but at least the Brits that I know here are always on the lookout for a good curry, not for good fish and chips. Anyway, Stuart says that everybody except elites are discontent that Brexit is not such a nonsense, I'd say. Yeah. Yeah, it's not nonsense. It's a big debate. Lots of discontent this week. Yanis Varoufakis, former finance minister of Greece, is coming to Barcelona. He has, as you know, been objecting, has lots of criticism on the Eurozone. He said Britain was right not to jump in. He said that Greece should have never joined. He explained the internal mechanics, but still said that it's better to fix it from the inside than from the outside. I'll try to go and hear him. It should be interesting. EU is a nice idea, but set of chains and liberties. Yeah, there are many issues, many problems, many secrets there. Some things are positive. I mean, to have one currency makes life comfortable. To have free movement of people makes things comfortable. But you know, I think that in the past few years, many people here feel that they've lost control. I mean, that the small elite is controlling everything. Thatcher is the best. I tend to disagree, but at least she was a bit more ideological and less corrupt. Okay, it's just turning into a fourth Reich and things like TTIP. I wouldn't say Fourth Reich. I think you're exaggerating here, but TTIP and other agreements also between the US and Japan are also problematic because, well, it's a very long debate, but in general, it's taking sovereignty away from the people. Question from Fabian: up to what resistance do you see the reaction of euro-dollar in case of ISM negative for USD? I want to say a big move, but unfortunately I cannot say that. Euro-dollar 111.30 at the moment. If we have a big negative in euro-dollar, sorry, negative for the USD, a terrible ISM non-manufacturing PMI. Hopefully we break above 111.50 and reach 112.50. Sorry, 111.80 and make it all the way to 112.50. But I doubt, because of the ECB meeting tomorrow, I really doubt that we'll have a big move. Same thing goes for the downside. Maybe a dip under 111, maybe 110.70, hopefully, if we have a really excellent figure, but I'm not optimistic. More questions here. Where companies do what they want with no liability? Yeah, it's only big business, not small companies. Answer Sirik's comments. Lucas says, problem is hard to see how it can be fixed from the inside. The institutional mechanics are just nonsense. Yeah, well, Varoufakis is optimistic. He says that's his faith to believe in that change is possible. Let's see how he wants to do that, because it's really an uphill task. Appears to watch today. Question by Jax. I would say, well, let's see the continuation. I would say dollar yen. Their special segment today is about dollar yen, so I'll explain also why. Well, and also in the context of the sales tax hike. And so that would be my favorite pair. The pound with the next Brexit poll and the UK manufacturing PMI. I would say that's second in line. And I think euro-dollar will be a bit boring today because of tomorrow's big event. Fabian asks, do you think the market is bearish positioned for tomorrow's ECB? No, I think it's quite neutral. And yeah, I mean, we did have a big fall in euro-dollar, but I think things are relatively stable and balanced. Comment from Luca, we saw a big sell-off in US stocks last day of May. Not profit-taking or seasonals taking the lead here. I think it's well, at the moment it seems like last-minute adjustments, but it could also be other reasons. Yeah, we've also seen sell-offs in other markets. The usual worries about China, corporate profits, I guess, but I don't have a full answer on that fall yesterday in stock markets. Yeah, I see it. Yes, more profit taking and seasonals. I didn't hear any specific reason. Okay, so hopefully I answered all questions. Oh, one more from Luca. Someone may go away. Risk off would have some big implications for commodity. Yeah, I don't really believe in the sell in May and go away, but May was certainly an interesting month. A great month for the US dollar. Almost a great month for the pound. We had some last-minute falls. Yeah, things may be improving in the wake of June, at least for commodity currencies. But let's see how things are moving ahead. Okay, so I want to talk to you today, special segment today. It's about dollar yen. We had one special segment about euro dollar, yesterday about pound dollar. Now, before we have the really big events tomorrow and Friday, the special segment is about dollar yen. Dollar yen is the world's second or third most important currency pair. Of course, euro dollar is number one. I'd say it's number two. Japan is the third largest economy after China and the US, and of course the US is the largest economy. We have special characteristics with Japan. On one hand, it ignores too many indicators in Japan. On the other hand, it's the best reaction to US figures. So in Japan, unemployment doesn't move the yen. Inflation, a bit. GDP also, and sometimes the Tankan survey. But many figures like retail sales in Japan, PMIs, nothing moves the yen. Also, the reactions to GDP, to inflation, are quite weak. Okay, so that's something that is special in Japan. Ignores too many economic indicators. Second point, the best reaction to US figures. Sometimes there's lots of noise around commodity currencies. With sometimes there's noise around the euro, around the pound. But if you can isolate sort of the best US dollar reaction is against the yen. A good US figure will have a stronger dollar yen. A bad US figure, a weaker dollar yen. Okay, so yeah, playbook. yeah. Oh, okay, well, notes taken, Luca. Anyway, this is a special segment about dollar yen. Take 2. So dollar yen ignores too many Japanese indicators. Contrary to other countries, the yen does not react to Japanese unemployment, does not react to Japanese retail sales, does not react to too many figures. Also, inflation and GDP and the Tankan survey do have an impact, but not as strong as other currencies. Okay, so that's one thing, the first characteristic of dollar yen, that it ignores Japanese indicators. However, point number 2 is that it has the best reaction to US figures. With US figures, we have sometimes the most straightforward reaction. A strong US dollar is seen against the yen in case of good figures from the United States. And in case we have a weak figure from the United States, the best reaction, the weaker dollar, will be seen in dollar yen. Okay, so the Japanese yen dollar yen ignores figures from Japan, contrary to many other currencies that react quite nicely, but always, or not always, usually provides the best reaction to figures from the United States, the most straightforward reaction, less noise. Okay, point number 3, a big influencer of dollar yen is stocks. When the Nikkei stock index goes up, the dollar yen goes up. In most cases, not all the time, but in many cases. Same thing with US stocks, stronger US stocks and dollar yen goes up, weaker US stocks, weaker Nikkei, and we have falls in this pair. So a very good correlation with stocks. In the past, there was a good correlation also with bonds, but I would say stocks have a great impact. Point number 4, dollar yen, or the yen in general, it's not only against the dollar, prone to intervention by the Bank of Japan. This intervention is frowned upon from the United States and from other currencies, from other areas. Bank of Japan intervenes either by talking down the Japanese yen, or the Ministry of Finance instructs the Bank of Japan to act to weaken the Japanese yen to support exports and push inflation higher. This is, I mean, all central banks have some kind of intervention, some kind of influence, some kind of desire, but the Bank of Japan does it directly, and it's the biggest major central bank that does it. Okay, and point number 5, that's a classic. It's a safe haven currency. So the Japanese yen, and in times of trouble, money is repatriated to Japan. Why does this happen? Well, the origin is that originally we had very low interest rates in Japan. It's still the case, and the yen was traditionally a funding currency. You lend in yen and buy other assets, riskier assets elsewhere, and then when in times of trouble, this money is repatriated, even if this trouble is in Japan, as we've seen in 2011, okay, with the Fukushima catastrophe. So in many cases, dollar yen falls when things get worse in the United States, in Japan, in China, terror attacks, you name it, okay? And it strengthens when there's a risk on atmosphere, okay? So this is also a characteristic of the pair. So to sum it up, The yen ignores too many Japanese indicators. Ones that do stand out just a bit are inflation, GDP, and Tenkan. Point number 2, it has the best reaction to US figures, the most straightforward one. Less noise. Point number 3, moves alongside stocks. Dollar yen rises with the Nikkei and the S&P, falls with them. Not always, but that's a main characteristic. Dollar yen, the yen in general prone to intervention, and it's also a safe haven currency, which means that sometimes the biggest movements in favor of the yen are in times of trouble, or against the yen is when we have the risk on atmosphere. Okay, so these are 5 points about the Japanese yen. Sorry again for the technical issues. I hope all of you are back, and or at least you can see the recording of this. Yeah, so that's it for this special segment for today. Let's reach the wrap-up for today. So this is the wrap-up for the live market open for June 1st. It's a Wednesday. The mood in market is mixed. We have Brexit polls tightening against the Remain camp, and this weighs on the British pound. Oil is not going anywhere fast around the OPEC meetings. Japan officially delays the sales tax by 2.5 years. This was no surprise, but we have a buy the rumor, sell the fact reaction. Figures yesterday were quite mixed. The ones that stand out are a miss on Canadian GDP. It weighs a bit on the Canadian dollar. No surprises from the Fed's favorite inflation figure, 1.6 year over year. Lower chances for a June rate hike, which already had low chances. Big news overnight: Australian GDP screamed higher, the best growth in 2.5 years, 1.1% quarter over quarter. Certainly helps the Australian and the New Zealand dollars, and no surprises from Japan. Let's talk about the charts in this wrap up and then move to the event for today. So the euro is rising just a bit, but very much in range ahead of the ECB meeting tomorrow. 111.80, 112.50 are resistance lines. Support 110.70, maybe 111 before that. Pound dollar, weighing the Brexit polls are weighing on it. 145 resistance followed by 145.80, and to the downside 144.40 and 143.70. Dollar yen, well, during the show it manages to climb back above the 110 level, but still significantly lower on the day. Fell off this line here at 110.50, which provided some support, and well, far off from 111.50. Next support 109.40 and 108.25. Dollar CAD flirting with this used to be a strong line of 130.80. High resistance 131.70 and support 130. Aussie dollar now sliding from the highs. Very nice technical behavior, tackling resistance at 73. 72.50 works as support. Further support 71.75. High resistance 73.75. And the Kiwi dollar higher within the range around 68. 68.40 is resistance. 66.70 is low support. Today it's manufacturing PMI day, where we are having these manufacturing PMIs now in the Eurozone. First disappointment from Spain, and we have a few more. And more importantly is the manufacturing PMI coming out of the UK alongside other figures. So it's expected to remain in contraction territory. It'll be a brief relief from the Brexit debate. Okay, so weak figure is expected over there. The manufacturing PMI from the United States is the most important one, especially as it serves as a hint for the non-farm payrolls on Friday. Here we're expecting to be on the positive side, 50, but also and this reflects slow growth. Okay, we have the milk auction sometime in the US afternoon, in the European afternoon, US morning. Always has an impact on the Kiwi. Last time we had a rise. And at night, Australian retail sales and trade balance. But the Aussie still enjoys, of course, the GDP. Okay, so that's the wrap up for today. Sorry for the technical issues. Let's see if we have more questions before we head off. So yeah, thanks everybody for the patience and hanging on. Luca provides here charts. Kiwi channel top here. The good thing is one can short with tight risk. Okay, let's share it. Yeah, quite a nice channel on the Kiwi dollar. We're approaching resistance. Yeah, let's see if we can break higher. Maybe milk prices will provide the fuel. will fall back down to range. Okay. Yeah, Fabian says it broke out of a steeper channel with more points of contact, so short, also consistent with the retest. Yeah, that would have retarget. That would have its target in the middle of your channel. Anyway, very nice channel here. Let's see if it's a break or a bounce on the kiwi. Yeah, so thank you very much, everybody, for coming, and wish you all a safe and successful day in markets. Sorry for those technical issues. Usually we're okay on the technical side. And see you tomorrow. Tomorrow, of course, focus is on the ECB, European Central Bank, and we'll also have live coverage of that with Valeria and Mauricio. So, of course, we'll mention that also tomorrow. So thank you, everybody, and see you tomorrow. Bye-bye.